Senior citizens, women, salaried class people, traders, HNIs, foreign investors, and retired people. Something was mentioned or given in the budget presented today for all such classes of people. And if you want to know what was presented, what is the benefit which you are receiving, is it a good budget for you or is it a bad budget for you, then you have to watch this video. Because in today's video, I'll tell you what all things are relevant to you and try to explain them. Hi, I'm Nishant and I welcome you to Save More Money, where we simplify personal finance and help you become financially independent. If you are new to our channel, please remember to click on the subscribe button, and if you find the video useful, please remember to like and share it with others. Number one, if you are a senior citizen, then the budget is definitely good for you because two important schemes, senior citizen savings scheme and the post office monthly income scheme. On these two, the maximum amount of investment has been increased. On SCSS, it was 15 lakh as of now, but from financial year 23-24, that is from April 2023 onwards, you can invest 30 lakhs every year. Similarly, in post office monthly income scheme, from an existing limit of 3 lakh, now you can invest up to 9 lakh rupees every year. And this is on an individual basis. If you are investing on a couple basis, then the limit will be more. So for women, a new scheme was launched and it is called the Mahila Samman Savings Certificate Scheme. Under this scheme, any woman or a girl child can invest a maximum of 2 lakh rupees for 2 years, and the rate of interest which she will be getting is 7.5% per year. She has the flexibility to withdraw partially during the tenure, and the scheme is a one-time scheme which is valid for 2 years. This is a good scheme for women. I will not recommend this scheme for girl child because they have Sukanya Samriddhi, which is giving higher interest rate. But if you are a woman who do not want to invest in fixed deposits or savings account and want to have some higher assured interest rate, then this Mahila Samman Saving Certificate Scheme is a good scheme. The good news for traders is that while there were speculations about change in the capital gains, no such additional step has been taken in the current budget. So the finance minister did not make any changes with respect to the capital gain taxation, and whatever has been the existing capital gains on long term and short term, they still stand applicable. For people who are HNIs, the highest rate of tax which is currently applicable for them is 42%, and this is one among the highest tax slabs in the world. So the government is focusing on them and they have reduced the surcharge from 37% to 25%. That means the effective highest tax slab rate for these HNIs has reduced from 42% to 39%. Small relief, but a considerable release for them. Next up is the benefits related to people who frequently travel abroad or who do foreign remittance in terms of sending the money abroad for either purchase of properties or for supporting your families or friends or anyone else. For people like these, the budget might not be good because now there will be a tax collection at source for all such foreign overseas travel expenses or any foreign remittance which is not related to loan or education. And the TCS, the taxes collected at source will be at the rate of 20% of the expenses. So if you are a salaried non-government employee who is retiring, then you can encash your existing leaves, and the limit for that has been increased from 3 lakh rupees to 25 lakh rupees now. Well, for starters, the good news is that there has been a revision in the new tax slab rate. To 3 lakhs of income, you will not be paying any tax. 3 to 6 lakh of income, you will be paying 5% tax. 6 lakh to 9 lakh income, you will be paying 10% tax. 9 lakh to 12 lakh income, you will be paying 15% tax. 12 lakh to 15 lakh income, you'll be paying 20% tax, and anything beyond 15 lakh, you'll be paying 30% tax. This is the new structure, and this is as compared to the old tax structure. So if you had used the current new tax slab, you would have paid a total of 1,87,500 rupees towards your taxes up to 15 lakh rupees of income. But in the new tax slab, which will be applicable from April, you will be paying only 1,50,000 rupees. So that means a direct benefit of 37,500 rupees. Similarly, as per the existing old tax slab, you have to pay 1,77,000 as the taxes on an income of up to 15 lakh rupees. If you compare this with the new tax slab which has been proposed, then as per new tax slab, you will be saving 27,000 rupees directly. That's on the tax slab part. The second benefit is related to people who have a salary up to 7 lakh rupees. For such individuals, there is a tax rebate and you do not have to pay any taxes. Well, technically, you will have to pay the taxes because as per the new proposed tax limits, anyone beyond 3 lakh will have to pay the taxes. So in your case, if your salary is 7 lakh rupees, then from a 3 lakh to 6 lakh slab, you will have to pay 3 lakh into 5%, which is 15,000. And from a 6 lakh to 7 lakh slab, you'll have to pay 1 lakh into 10%, which is 10,000. So you'll have to pay a total of 25,000 rupees towards taxes if your salary is 7 lakh. But this 25,000 will be refunded to you. And this is applicable only if your taxable salary is 7 lakh rupees or less. Now the third benefit is for people who have salary of 15.5 lakh or beyond. If your annual salary is above 15.5 lakhs, then you will be eligible for a standard deduction of 52.5 thousand per year if you avail the new tax regime from April 2023 onwards. So the government is basically trying to push new tax regime, and they are giving all the incentives, be it the new tax regime related tax slabs, be it the standard deductions, or be it the exemptions up to 7 lakh. Everything is applicable on the new tax regime. And with that, the next point is related to the default tax regime. Government has said that from April 2023 onwards, new tax regime will be the by default tax regime applicable for everyone. However, if you still want to go for old tax regime, you can do so by selecting old tax regime with your employer or while filling the application form on tax filing time. Remember that all these which I have mentioned is applicable from April 2023 onwards. So what that means is the current assessment year which will happen when you file your taxes in June, July, you will still be using the existing tax slabs and the existing tax regime which you have opted for. So either the old tax regime or the new tax regime which is existing. Anything new that will be applicable only next financial year, which starts from April onwards. So just remember that in mind when you are filing your taxes. That's it guys. I hope you found the video useful. Please remember to share it with others and spread the word. Until next time, this is Nishant signing off. Bye. Take care. Tada.